Hello and welcome everyone to another episode of On the Record with your host Tone Vays here on the World Crypto Network. And today we are joined by Josh Scigala. I hope I pronounced that right. Of Vaultoro. And go ahead and introduce yourself, Josh.
Yeah, I'm Joshua Scigala. I'm the CEO of Vaultoro. We are the only Bitcoin Gold, actual allocated gold marketplace order book that started 2.5 years ago. Others have tried, but they haven't really had a full order book. They've just had an OTC market, so just a market maker.
All right, gotcha. So I'll be honest with you. So the main reason why I have you on is because several people have reached out to me asking what I have thought about Vaultoro. And It's a difficult question for me to answer because I do not actually use your service. And I also try not to vouch for people. So I wanted to have you on and try and ask you some skeptical questions. And perhaps maybe you can convince me that you have a product that maybe I would be able to participate or someone else. So some of the questions will be a bit on the skepticism side because that's also what I'm known for. But before we get there, so you're coming to us from Germany right now, right?
Yep, from Berlin. We're in Techstars, Berlin, which is an accelerator program. Yeah.
All right, so why don't you kick us off just telling us a little bit about your background and where you started and how you got into this business,
Sure.
Or maybe why you like Bitcoin. And we do want to keep this part a little bit shorter so we can get to to the real meat of some of the questions.
Okay, sure. So basically, I have always been obsessed with alternative economies. I built the world's first swap site where women could swap clothing with each other instead of buying and selling. So like an eBay where you would just trade clothes. But I realized very soon that you need a token in the middle because it's very unfortunate when you just cut a deal because I like something that you like, but you don't like anything I like, then a deal falls through. That's very unfortunate. So I did that, and then I was very lucky because of my obsession with alternative currencies. I found Bitcoin, Satoshi's white paper, very early on. I think it was at like 80 cents, and then I bought a couple at $1, and then I just fell down the rabbit hole, and I've been living in that rabbit hole as I'm falling ever since.
So you've been in this, sounds like, before Roger Ver even, because Roger Ver famously says he bought his first Bitcoins at $1, but sounds like you were in just before that even.
Well, I wasn't really in. I just read the paper. It must have been around 80 cents. I'm not sure, but it was very early, and then it was actually when it reached parity, I saw again another headline, reached parity with the dollar. And I thought, oh, okay, this is, and then I read more and bought some. But I've been, buying and selling and trading and jumping in and out of these things for ages. But yeah, total Bitcoin maximalist, if you like. But I understand there's also a place for altcoins.
Cool. So why don't you tell us exactly what Vaultoro does and what services it offers? And then my follow-up question will be, why did you choose to start this business? And what expertise did you bring to the table that, makes you the right person to continuously run this business? Because clearly Mark Arpellis did not have much expertise in running an exchange. Let's put it that way.
Yeah.
So,
no, totally. So basically what happened was Mt. Gox came along and talking of Karpellis, and I lost a fair chunk of money during their collapse. And it really upset me because not only did I lose money, but thousands and thousands of other people also lost their hard-earned money. And I thought, first of all, right, we have to build a decentralized exchange. And so me and my brother, who's a really amazing coder, sat down, and he's also been in Bitcoin for a while, and we've started figuring out how to build a decentralized exchange, but the op return codes just weren't in Bitcoin, and it was too slow. We really wanted a price discovery mechanism as well
I'm sorry. Can you just explain for some of our audience that aren't too technical? When you just said the op return codes weren't up to par. What do you mean by that?
Just basically the Bitcoin scripting language wasn't up to par, and that's kind of what Ethereum's trying to solve, but in my mind, kind of badly. So instead we thought, well, look, the other thing we want is to have the counter asset, something that can be allocated to someone's name. And so what you're seeing right now with Mt. Gox is it collapses, the lawyers come in and start going through everything and liquidating and basically taking all of the creditors' funds through their processes. So I wanted an exchange where the counter asset would be allocated in their name and not the bank's property. And many people don't realize when you put money in a bank, fiat, it's not your money anymore. That's why they give you interest. It's their money. They can go off and speculate with it. They can do whatever. And when they fail, it's on their balance sheet. So it gets taken down. Your funds get taken down with it. And so
right, because the lawyers and regulators get paid first.
Exactly. So I really wanted an exchange that was real time. So we dropped the decentralized side and thought, okay, we've got the blockchain. So the blockchain enables us to be super radically transparent. So we focused on transparency, having a real-time centralized exchange, because gold is centralized anyway. It's sitting in a vault, and it has to sit in the vault for auditing, insurance, and stuff like that. So the important thing was to focus on transparency, and that's what we did. We basically built the glass books protocol, we called it, where what we do is we give every user an anonymous ID, and they can then log out of the system so we don't know that they're checking. And we publish every anonymous ID along with how much gold that anonymous ID is holding and how much Bitcoin. Then we publish at the bottom of the page the sum of everybody's holding, and you can do the calculations yourself if you want. But you can also then see the cold wallet and warm wallet addresses, so you can check that against the sum of everyone's holding, as well as the vault operators' statements, the auditing certificates and insurance certificates for the gold. So that was really important for us to show, to have something that, and if Mark had this sort of transparency, red flags would have popped up way before he tumbled into nightmare zone.
Actually, if you go back, and I did actually go back, Karpelès didn't. If he had done that kind of due diligence, he would have never bought Mt. Gox, because he bought it and then realized 80,000 Bitcoin was missing after he had purchased it from Jeb McCaleb.
Really?
Yes.
I didn't realize that.
Yeah, Mark didn't start Mt. Gox. He bought it off of someone, the guy that also created the Ripple token.
Yeah, I knew that he bought it off Jeb, but I didn't know he bought it in debt. Yeah,
no, well, Mark didn't know he bought it in debt, because there's a famous email, and it was published like when Mt. Gox was collapsing. This email came out where Mark is emailing Jeb like a month after he had purchased Mt. Gox, asking him where the missing 80,000 Bitcoin is. And Jeb has given him ideas. Oh, maybe you can just buy it. It's not a big deal. It's only $80,000. Maybe you can mine it, or just slowly buy it because you run an exchange. Yeah, it was a $60,000 problem. Later, it was like a $3 million problem.
Yeah.
And then 6 months after that, it was a $70 million problem, and Mark was done.
Yeah. That's why I've never understood microloans in Bitcoin, where you have to pay back in Bitcoin, because it's just it's a very risky game. If Bitcoin goes up, you're on the hook for a lot more.
Oh, trust me, I know. That's how I ended up losing a decent chunk of my Bitcoin as well.
Oh no, I'm sorry, John.
Yeah, it's all good, man. I'm slowly getting over it. But all right, so okay, so you're providing your users with like full auditing. Of course, there's still some gaps there, but it's better than nothing. which we may or may not get into. But so what does your platform actually offer the user? Like what do your clients, what can your clients do? Like why do they use Vaultoro?
So basically, we buy full reserve, good delivery bars from the vault operator. The vault operator is toJoshua, which is the second largest vaulting facility and retailer in Europe. And they source the gold from, they're all LBMA approved bars, so they're super liquid. And then we as market maker sell that onto the market, and then people start bidding and asking with that allocated gold. That means that it being allocated, and this goes back to what I was saying, means that it's off of our balance sheet. Once someone buys it, it's off of our balance sheet. It's their property in their legal name. And that's really important, that if we go broke or if we are not good at what we do, then it doesn't matter. Our client's gold is in the vault, it's sitting there. It's and as we know, gold has lasted for 3,000 years. You know, we talk about Bitcoin's obituary of being 8 years long, but gold's got an obituary of 3,000 years through the nightmares and the wars that the human condition has thrown at it. It's always come out afterwards holding its value. And any fiat currency that's been through a war basically collapses to zero. So,
right.
Yeah. So that's what we offer, is the ability to trade into something. And we get a lot of traders also that trade into gold at nighttime because they want to sleep and actually sleep well. And then they jump back out into cryptos and do their day trading.
So wait, you just used plural. You said cryptos. Do you offer more than Bitcoin or just Bitcoin?
No. So we just Bitcoin. We do have a Shapeshift integration, so anyone can upload anything, but it does convert to Bitcoin, and then it sits there, and we only pay out in Bitcoin.
Okay, so you only handle physical gold.
Yep.
And Bitcoin. You don't actually handle any alts. You let Shapeshift do the work, and you don't handle any fiat either at any point during a transaction. So other than you liquidating the Bitcoin to purchase more gold, I guess.
That's right. Yep, that's right.
Okay.
Yep.
And do you have like gold on reserve so that you aren't like instantaneously having to buy gold? You have like extra bars of gold, and then as people buy the gold, you allocate that gold to the people.
That's right.
So you have both a Bitcoin cushion and a gold cushion on reserve, so you're not doing all of this in real time, and you try to like buy these things in bulk.
Exactly. And our transparency protocol shows all that. Because of that transparency protocol, we have to buy gold forwards, and investors have asked us to figure out, how we make sure we don't risk ourselves, because other gold companies have basically been so obsessed with gold that they've bought like massive amounts and stored all their own value in gold. But so we try to just buy little amounts ahead, so maybe a couple of kilos, and then as that's selling down, we buy then another couple of kilos or whatever.
Right. Yeah. But you don't actually physically handle the gold. It just goes directly through your supplier directly into the vaults.
Yeah, so toJoshua deals with the gold. They have contracts with the smelters and the mining companies who actually store, because the vault is the top tier vaulting facility. In fact, their security rating, the only vault that's got the same security rating as them is these European Central Bank vaults. So they've got, and they're private, so they're not part of a bank. So it's I really wanted to be bank independent.
Yeah. Hey Josh, so we have readers, actually live listeners, curious like where the gold is being held. So you mind shooting me over the links to your gold supplier and the vault, and I'll add them to the video description so that people would know who your actual gold supplier is. Okay. Yep. So here's the question, right? So how many people are working at the company?
So there's 4 people at the moment, and we're just raising.
Is your brother the main developer? Is he the CTO?
Yeah, Philip's the CTO. Yep.
Okay, excellent. And where do you guys have like some kind of expertise as to like buying gold forward? Like, do you is that something that you have picked up over the years? Do you guys have any like finance advisors on what's the optimal amount of gold to have and to hedge yourself on the risk side of things?
Yeah, I mean, the thing is, we really don't have that much risk. Because we're basically a technology layer between the old school gold world and the clients that want to buy it, and we just facilitate that. Saying that, we do have Waldemar Meyer on board, who is the head of the Precious Metals Association of Germany. So he's got a lot of expertise in gold. We have Philip, my brother, had his own web development company who was focused on developing web applications for the gold industry for 10 years. And myself, I was obsessed again with alternative currencies and economics. So I've always had gold. I've always bought gold and silver and that whole thing, that whole libertarian stuff.
Okay, so how are you regulated? Like, what regulation are you following, and how are you handling like the U.S. compliance side of things? Oh, by the way, so it sounds like every one of your customers has to be fully KYC'd, like you know where they are.
No,
right?
So this is the other thing, that gold is regulated very differently than the financial services industry. Gold is considered a good, and so in Europe you can buy up to 7,500 euros worth of a good without pulling down your pants and showing everything. So if you go to buy a TV, you don't need to show ID and all that stuff, right? And these are very important laws because it facilitates trade, and it would be very, very dangerous if everyone had to show everyone their IDs and keep copies of scans. It would basically be identity theft heaven if they lowered that threshold too much. So what we've done is we've lowered that to 5,000 a day. And the reason is that what we wanted to achieve is that the underbanked or the unbanked in developing countries, a lot of these people don't have the paperwork to satisfy KYC regulations. So they can't use BitPay or someone like that who takes out any volatility risk of Bitcoin. So what they can do is accept Bitcoin now, hold it in gold, and then sell that down to the cent as Bitcoin again when they need to restock. So we're seeing a lot of people doing that. But to come back to your question, who we're regulated by, we're regulated under English law. Gold is not regulated as such. It's a self-regulated industry in Britain. There are voluntary regulatory bodies. But yeah, it's the London Metropolitan Police Force is the investigating authority. And the prosecuting authority is the UK Crown. So it's, in terms of best business practices, we look at the London bullion markets and basically take heed from them. Where it gets gray is the Bitcoin side, but I think every Bitcoin business deals with that.
Right. So let me get this straight here. So you're saying that up to 5,000 dollars or pounds, it doesn't matter. They're almost at parity anyway. So up to 5,000 pounds, I guess, worth of gold can be purchased from your site without a KYC process.
Per day.
Per day.
Yeah.
And you would be able to, let's say, well, I got a problem because I'm currently in New York, so I got my own Bitcoin issues, right? But let's say someone from a neighboring state like New Jersey, right? They would be able to send you up to 5,000 pounds worth of Bitcoin every day to purchase gold, and they can do this for like a week straight or a month straight.
They can keep going. The thing is that we are required to have suspicious behavior reports. We've never had to file one. I think what it would say is if someone was to go to exactly 5,000 every single day and fill that up, we would email them and say, look, first of all, this is allocated gold. So right now it's allocated to your email address. We recommend, as you're getting bigger holdings, please verify yourself, because if something was to happen to you it's going to be very hard and very expensive for your estate's management. If you die or something, your estate's management has to, sort out all your stuff. It could get very expensive if it's not truly allocated to your name to prove that that email belonged to the deceased or whatever. So we do ask people to verify themselves if they do get a larger holdings, and we would email them to say, look, we're going to have to please stop uploading exactly $5,000 a day because it's looking suspicious.
Right. So you would warn. Okay. So you would warn the person that you're acting suspiciously at this point.
Well, we would ask them where they get the funds from.
Got it.
Just doing.
I got it. I see.
Yeah.
I see. And people are able to take delivery of that gold if they wanted to, right?
Yes, but the thing is, the reason why we don't need to take the KYC is because there's no real money laundering capabilities. Money laundering is a circle. You come in with black money, you trade it a few times to different things. People buy it. You buy some artwork, you sell it for way more expensive. And it's a circle. Vaultoro is a one-way street unless you get physical delivery. So a one-way street meaning you come in with Bitcoin, you buy gold, you leave with Bitcoin. If the cops come to you and say, hey, where did you get your Bitcoin? You can't say Vaultoro because we don't sell Bitcoin. If you get physical delivery, then we do have to ask for KYC. It's just part of it. But we're very, very security conscious. We do everything to to encrypt and double salt everything that goes up. And
gotcha. Yeah. So people are able to take physical delivery of their gold, but at that point you have to file in your records in case the government shows up of who you delivered it to.
Yeah. I mean, the government, if for the government to show up, we would need their government to first contact the London Metropolitan Police and then go through courts to get, because European privacy law is very strong. You need a good case to be able to get that sort of information, which is important.
Gotcha. Okay. And what is your minimal amount for, let's say, physical deliveries? 1 kilo? What is your...
Oh no, it depends where you are, but it's down to the gram. I mean,
Oh wow, okay.
Yeah, the thing is, what I'd like folks to remember though is we weren't set up for a cheap way to buy physical that you can take home and cuddle at home. You can do it because it's your gold. You should be able to do with what you want, but it's not the cheapest way to do it. It's better to sell it for Bitcoin and go and buy it at a store locally, just because there's smelting costs, there's insurance. Have to give a window that the vault can be open, and there's all sorts of stuff that goes on in the background.
Okay, gotcha. So
our main point was to enable people to instantly hold their value in a solid asset, and then be able to, and then if shit hits the fan sort of scenario, you're fine. But also if you just don't, like a lot of families I talk to were like, look, I love crypto, I love Bitcoin, but I don't trust it. There's so many other, I don't know which one, is Ether next, is Dash gonna, is the whole hard fork, I'm not gonna put my whole family's life savings into this stuff. But I do wanna exit fiat. I don't want to go back to fiat. And this is where I think it's really nice, is that crossover where you can hold it in a government independent, decentralized metal, because it's sourced decentralized, no central authority issues it, and be able to use crypto to move the value about is really wonderful.
So what would you say, like across your entire customer base, percentage wise, how much how much Bitcoin are you holding for people versus how much gold are you holding for people? Is it like 80% gold, 20% Bitcoin, or the other way around, or is it like 50-50?
We can have a look on the transparency page, audit.vaultoro.com, and have a quick peek, see what the current numbers are. So currently there's 435 Bitcoin and nearly 78 kilos, so 79.933 kilos. So there's a lot more gold.
So you said 435 Bitcoins?
Yep.
And how many kilos of gold?
79.933 kilos.
Whoa, that's actually a lot.
Yeah.
Whoa, there. Okay. So it looks like you're about 85% gold and like 15% Bitcoin.
Yeah, the old 80-20 rule applies to so many things. It's amazing.
That's very, very interesting. And the gold is insured. The gold is pretty protected for the users.
Yep, gold's fully insured against theft and all that stuff.
So here's the interesting question, right? So you're holding 79 kilos of gold. How what would you say like the ballpark of that gold is registered to a KYC person, like you said earlier, right? Like if they're holding a substantial amount of gold, you ask them, to KYC so that the gold becomes better protected for them. So how much of that 80 kilos of gold would you say is, if the person dies, you don't know what to do with it?
Yeah, actually, 2 points there. First of all, most people verify themselves, even without uploading any Bitcoin yet. It's amazing. So it's quite interesting. I really thought it would have been less, but most people, as soon as they start buying more, they verify themselves. So I'm not sure of the full number, the exact number, but it's very high. But yeah, there's been cases, and this is where I'm always skeptical of people that offer gold with zero storage cost, because there's this cost of demurrage, which is this cost of holding money. You have large vaults, vault doors, you have insurance, you have auditing, and this all costs money. And there's been cases in the past in Europe where vaults have offered free, and then the person has died, and they're basically contractually obliged to hold this stuff forever. If you have a fee, it slowly eats away at it, and that's kind of important as a vaulting operator.
And how big is your storage cost plus insurance fee onto the customer?
It's 0.4% per year, which is really tiny.
0.4% per year. So that includes all storage expenses, right? So that's the insurance that you pay, and then basically and the vault operator.
Yep, insurance, auditing, and auditing.
And how is that deducted? Like, do you just like take away a person's gold position?
I've forgotten the exact. I think it's every 10 minutes or so. It looks at how much someone's holding, and then accumulates it over time.
Yep. Okay, got it.
Because people come in and trade and stuff. So if you're lucky enough to come in and trade out, some high frequency trading bots don't even pay because they jump in straight away.
Gotcha. But you don't charge a Bitcoin storage fee, correct?
No.
Do you have any kind of insurance on the Bitcoin, since you are holding 435 Bitcoins? It's not that much money. It's only about 500,000 US. Do you have insurance on that as well in case you're hacked or something happens to those?
No, but it's something I'm definitely very, very interested in. I'm an absolute security nut, and I mean, what I can say about that is that I think most hacks, I think 99% of hacks in this industry have been inside jobs, blamed on outside hackers. I mean, maybe there's been some that maybe it's less the number, but I think what happens is that you get the company starts becoming bigger and bigger, and you have more employees, and that's when you need to really knuckle down with security, internal audits. And actually a lot of regulation that comes from the financial sector is based on that concept. How are you structured? Are you compartmentalizing and making sure no one actually has the big picture apart from a few, and all this sort of stuff. So yeah. But yeah, insurance is something we're looking at.
And it probably helps that your brother is the CTO, right? And not some guy you met like a year ago.
Yeah, exactly. Yeah. Yeah.
Okay, so how are you different than some of the other, bit gold players, or specifically bit gold? And then maybe we'll get into, the past history of like eGold. How are you avoiding those kinds of problems? So what about BitGold? How are you different than BitGold? And I don't know if you saw my earlier interview with Anthem, and maybe we can briefly talk about tokenization. But let's start with.
I'd love to.
Let's start with BitGold.
So the thing is that BitGold is not a true marketplace. It's not an order book. So you're always trading with them. So if you have a large position at Gold Money or BitGold, if you have a large position by them, they could choose to change their buyback price, and you're forced to pay that. Being a full marketplace order book, if we change our buyback price as a market maker, people will just jump in front of us in the order book to find a fair market price. And this is a very, very key important point. The other thing is that we are focusing on crypto. So if we're about to actually launch a Euro side, but our crypto side is we're from Bitcoin for Bitcoin. And if they say they have BitGold have dropped their name now, but they did have Bit in their name, but that was about the only thing really. You can buy crypto in one vault by them in Dubai, but then you can't get crypto back out. So if you want to sell the gold, you can't get crypto for it. With Vaultoro, you jump into gold with Bitcoin, you jump out with Bitcoin. It's really fast and fluid. And we also have APIs that go into Crypto Compare and all these other services.
Wait, so maybe I missed this part earlier. So you actually have open trading. So you don't set the gold price. People can just trade actively, but you probably have enough people arbitraging against traditional futures market, perhaps. Okay, so you let people buy and sell gold at their own price. You're not setting the price of Bitcoin to gold. You're letting the market on your platform do it.
That's correct. Yep, that's correct.
So and what kind of? And you're keeping. I guess you have like a transaction fee and like a small spread on the gold as it happens, right?
Yeah, I mean, if two parties trade with each other, we don't get any of that spread, but we do take 0.5% of a trading fee, and that goes down to 0.25% depending on how much they trade.
Okay, so you take between 25 basis points and 50 basis points as a VIG on the trade.
Yeah, as a percentage.
Okay, got it. Okay, makes sense. All right. So let's talk about eGold and the problems that they had. So you don't have those problems because you're once you give up the Bitcoin that they're out, you're not facilitating anyone's transactions, right?
Yeah, and this is where I was worried about what Anthem was talking about. eGold, they enabled people to trade, to send gold to each other and use gold as this transfer protocol, as not only a store of value, but actually as money. And I just, the whole reason Satoshi Nakamoto came up with Bitcoin was that eGold and these companies that try to set up private currencies get beheaded. How we're different is that there is nothing wrong with people buying and selling gold. There's nothing wrong with someone saying, right, but we just make it super fast and super liquid. And it sort of stems into tokenization. I see a lot of problems with tokenization of gold, even though that's the wet dream, the libertarian wet dream is to have tokenized gold. But for instance, the storage of money costs something. We mentioned it before, called demurrage, or I'm not sure how to pronounce it in certain countries. It's different pronunciation, but I call it demurrage. It's the cost of holding value. So if you release a token that's worth $1 gram, and you touched upon this in your podcast with Anthem, if you release a token that's 1 gram worth and you're holding 1 gram in the vault, and then next month it's worth 0.998, it's just not like there's some problems with people's mentality. It's funny because they're willing to pay a fee outside of that, like we have the storage fee and people pay it, but if it's taken directly from the token, it causes some issues. The other problem is if there's a crime that's created, a crime that's committed between 2 parties, and they're using the token and we are storing the value in the vault, then we could be held theoretically liable even though we didn't know the crime happened. And so by tokenizing it, you're enabling people to do that. And then of course you have the KYC thing, people are sending tokens everywhere. The whole point Satoshi came up with Bitcoin is to decentralize money. So, and I think the tokenization is, I mean, the crypto is so amazing and it's so fast. There's no need to back gold with tokens anymore. You can just jump in when you want that security and jump back out when you don't want it anymore. I just think it opens up a world of pain and a world of, well, a can of worms, basically, a regulatory can of worms when you start tokenizing gold. And also it's unallocated. You know, it's allocated not to you because you can send that token to someone else. So again, you're dealing with a pool of gold that's sitting there on the company's books. And if the company fails, that pool could go with it.
Yeah, no, I completely agree with you. And then on top of all that, they chose Ethereum to be the underlying platform, which, you know, opens up a whole new set of issues, in my opinion.
Crazy. If Ethereum forks, which they said they will, they'll go to proof of stake. What happens in that fork? Because there's miners that have built a lot of equipment. They're going to stick to proof of work. So you will.
That's what I've been saying for a long time.
Is it? Yeah, right. So we're on the same page. And what will happen there? You've now got multiple tokens flying about. You have to then check because they will be cross-compatible. If you receive one, it's still on a network. I mean, I guess the wallets will check. I don't know. Anthem then has to be the dictator to say, right, we're going with this one. I'm not sure. It's a can of worms and it doesn't need to be there. Why? Yeah, it had to be, you had to back paper with gold back in the day because you went to the markets, you basically gave Mr. Rothschild his gold, your gold, and then you got a certificate back. And then you went to the markets and you, instead of going and getting the gold, you would just trade the certificates. And that's where this paper money comes from. But with crypto, we don't need paper anymore because you can just jump in and out of gold if that's what you want.
All right, so now let's get to some of the tougher questions about my criticisms about the community. Just before I get there, though, because someone brought it up in the live chat, and I'm very curious because that was not on my list of topics. How are you funded? Were you self-funded, or did you have investors? How did you where did you get the finances to start this venture?
Yeah, so a little bit self-funded, but we also raised a small seed round, small angel round, I'm sorry, of 100K. And we've been living off, been basically working off those two. Berlin's very cheap to live in compared to the rest of the main capitals of the world, like New York, London, Paris, even Sydney. I mean, they're all extremely expensive. So Berlin is a great place to start up startups. If you're thinking of building a startup, I would definitely recommend it. Yeah, so that's where we got our funding. And
are you looking for more funding in the future, or you guys are doing pretty well with? I mean, you're making revenue, right?
Yeah, we're making revenue. It's not enough to pay us yet. We're I'm lucky enough. Me and my brother got into Bitcoin early enough, so we can sustain ourselves for a while. That's fine, but. We're currently actually raising. We started raising 2 weeks ago and got a quarter of the round filled already. We're looking for 18 months runway.
How big? How much are you looking for? What's the round?
It's a seed round. We're looking for 18 months of runway. So we're deciding. We're letting the market decide what that means in terms of how many investors are interested. And because really when we built the financial model, a lot of it came down to marketing, especially now that we're bringing euros on board. We really want euros. We're building now an application where anyone can basically store their euro assets outside of the banking system in allocated gold and have a debit card, which will be actually the first real-time debit card. So when you swipe it, it actually spends in real time. The gold money one, you have to like go into the app, sell the gold, charge for USD, charge the USD to the card, and then spend it. So this one will be real time, and what we're hoping is that gold will be a Trojan horse for crypto to enable people to learn about crypto, because a lot of people that are interested in gold have heard about Bitcoin, but they're not interested enough to actually delve down the technical learning curve that they need to learn about crypto. And I think gold is a really good gateway drug into the crypto space.
I do want to get back to the funding thing, because you said something like that, because that's not normal what you're doing, right? Usually you have a valuation and you have X amount you're looking to raise because you have already projected how much you need for the next 18 months of runway, let's say, right? So, and are you looking for specifically from accredited investors, or are you going the Indiegogo route and the like peer funding? Like how are you trying to raise your next set of capital? Because it sounds strange to me that you don't know how much you need.
Oh, we do know. We have a guess. So our goal is 850,000 as a minimum, but we're getting quite a lot of interest from investors. So we're just we're sort of keeping it open. Saying that, no, I've looked at ICOs and I've looked at crowdfunding, equity crowdfunding, and I still, we have a big idea, we have a big plan, and I don't want to put up roadblocks for a larger Series A round. And I think there are problems with ICOs. So there are game theoretical issues that I see with ICOs where a lot of these companies come up, they do an ICO, and what the problem with ICOs is they get the money all up front. So they have this incentive to either run with the money, either it was a scam from the start and they run off with the cash, or they get the cash and then they get bored of the project and walk away. So I'd much rather.
Well, not just that. I mean, like key players in that project now have the ability to take the money and go find other jobs, right? In my view, I mean, that's you had 8 founders of Ethereum and 1 remains.
Oh, really? Yeah, right. Yeah, okay. I mean, exactly. So I think ICOs are very, very interesting. I'm not discounting them. I think they're a fantastic technology, but they just need some work. I would like to see a contract that slowly pays out based on benchmarks done by the team or something like that. That would be fantastic. But I haven't really seen anything like that yet.
So you have no plans for an ICO. You are going the traditional route.
That's
through
right.
accredited. You're still looking for a second seed round, right? So you're not even at round A yet.
No. We're just, like I said, in Techstars, which is a fantastic program, and it's opening up a lot of doors to that the traditional investor round. Yeah, I mean, we did try for a crowdfunding on Bank to the Future, and it was Bank to the Future had just launched. It was very new. We were one of the first things on there, and we put our minimum too high and didn't get it at the time. Yeah, so I think we might look into crowdfunding later on, because I do like the idea of giving the little guy the chance to invest. I don't buy this whole, the state's got to protect the little guy from losing their money, because while they say that, then they're putting all these slot machines all over the place for poor people to lose their money on, and they don't have the ability to try to invest in some interesting startups. I think that's a shame.
Okay, gotcha. So this is going to be our last segment coming up, and do a little screen share because I do want to talk a little bit about. I took a look at your terms and conditions.
Yep.
So here's the website, by the way, to those like live viewers. This is the Vaultoro website. It's amazing that you've been doing all this with just 4 employees, which is.
We're very passionate.
Yeah. Okay. So so before I get there, so what happens? So if people are able to use your service without a KYC, you do have their login information, right? It's not like a private key. Like if I like my email and my Bitcoin, if I forget my login, I'm screwed. But that's not the case here, right? You have password recovery for people, so you do have their passwords. They're not encrypted on your system.
Oh no, the passwords are fully encrypted, of course.
Oh no, they're encrypted, but you have access to them, right? So it's like a Gmail versus Proton Mail situation, right? Like Proton Mail is my email provider. They do not have my password. Like if I forget it, I will never ever see my email.
Oh right, yeah. I mean, we can do it. They can reset their passwords, and we can.
Right, you are able to reset people's passwords.
Yep.
Okay, just checking. So it's not a bearer login to your site.
No. It's not like blockchain.info where it's client-side encryption.
Okay. Just making sure on that front. Okay, so I did take a look at your terms and conditions, and there were a couple of things that do need some additional explanation. Mm-hmm. So one of them is right here at the top, where it says Vaultoro's right to remove orders at its discretion. And then it doesn't give much of an explanation, but it says, you agree that Vaultoro reserves the right to remove any orders from the order book at any time and for any reason. That seems a little strange. That's not normal. That's not what I normally. I mean, I'm a trader, right? That's not what I expect from my from a traditional exchange.
Yeah, look, I mean, we've never done it. It's something that we put in there because if there is, let's say, a hard fork or something happens in the protocol where we just need to put a stop on trading right away, we don't want to be liable for that. So, we are working, Bitcoin is very experimental still. We're in a new frontier. So we just wanted to put in gaps to make sure that that as fair as possible, we can make sure that there's no losses occurred either for our clients or for us. So,
okay, so just my non-professional advice would be to expand that section and to clarify that it's the Bitcoin part. Like, for example, if, let's say, Bitcoin has an accidental hard fork and blocks have to be rolled back, like what happened in 2013, I wouldn't even call it roll back, but, one chain had to be quickly killed, right? So I would definitely want to see more clarity here as to why this could happen, because it does kind of give you the right to remove people's trades if you don't like them.
Right. Yeah, but I think we would lose clients very quickly if we started doing that. It's not something that we're planning to do or do ever. But yeah, you're right. It's there.
All right, so let's jump on to another section also of limited and exclusions of liability. And you do have a pretty extensive list here, and also maybe you can go through some of them because, again, some of them are a little bit vague. So for example, Vaultoro shall not be liable to you for any pure economic loss. I'm not exactly sure what that means.
So if you make a trade and it goes bad and you say, oh, I lost money using your service, then you just made it bad. You bought gold and it went down in price, or you bought Bitcoin and it went down in price. And so, yeah.
Okay.
Or let's say, or the order book might get thin and they do an accidental market order and they lose money. You know what I mean? There's lots of edge cases that.
Yeah, no, that happened to me actually. Kind of recently in the traditional stock market, I totally I screwed up. I forgot to put a minus sign in front of a really complicated spread order, and I actually ended up paying to take on a trade. I actually ended up paying to liquidate a trade I was supposed to get paid for. It's a weird situation. And the moment I liquidated it, I'm like, wait a minute, did I just pay someone to take a profitable trade off my hands?
How annoying.
Yeah, it was bad. It's not it's not like I gave away my Bitcoin. It's like I paid someone to take my Bitcoin off my hands. That's actually happened to me.
I'm very sorry, man. That sucks.
It wasn't a lot of money. It was only I don't know, a few $100, but it was but you're right. This is what happens when you fat finger something. All right. So the next one actually is a bit problematic. So I might you're about to get grilled on this one.
Okay.
Loss of corruption of data or information. So I'm not sure how you can, obscure yourself from being liable to your customers if, let's say, your brother, the CTO, screws up something in your system.
Right. Yeah. I mean, I saw that more as data lost on the client side. So if they lose, they don't verify themselves and they lose their password or something like that. Yeah. I mean, yeah, it's an edge case, and yeah, we might have to look at it. I mean, these terms and conditions were written 2.5 years ago, so I think it's something we should definitely look at. Yep.
All right, cool. So let me just glance at a few more. But yeah, that's definitely something that you want to double check.
I mean, our entire service is backed up 3 times or more, actually, real time.
Yeah, but I guess I believe you, right? Or I don't believe you, but that's kind of irrelevant because if your terms and conditions allow you to not to do that, right? It's an issue.
Fair enough. Yep.
Well, you also mean loss of anticipated savings. So is that when a person puts all their money into gold and then the value of gold goes down, you don't want to be liable for the loss of value of the gold?
Exactly.
Is that how I am to interpret number 4?
Yes, that's right.
Okay. And what about loss of business? What is that referring to?
If they forget their login, or it goes down, or the gold goes down in price, and they have to restock. Let's say they're a shop and they need to restock, but the gold has gone down in price, or the Bitcoin's gone down in price, and they, didn't get it out in time, or there's so many reasons people go after you, even though it's their fault, because they try to push fault somewhere else.
Right. But again, so I would strongly review this, because this can be interpreted as loss of Vaultoro's business that Vaultoro is not responsible for. Okay. Because it doesn't specify business from which side of the transaction.
I see. Yeah, client business. Yeah, right. Okay. Good point.
So, yeah. And I'm assuming, so it's the same thing: loss of business, loss of profit, loss of goods.
Yeah.
But again, your interpretation is you're talking about the consumer, but the other way to look at it is, if Vaultoro loses profits and or Vaultoro loses the goods, which is gold, Vaultoro may not be held liable, which you should be.
Yeah, but this is again why we trade in allocated gold. So loss of profit, it doesn't actually matter to our clients if we are not profitable, because it's not our gold. It's not on our balance sheet. Loss of goods, we cannot lose their gold. It's never left the vault. It's just sitting there. And if it gets stolen, it's insured.
Right. So, and what about shipping, right? What happens Well, what's your liability like if you're shipping the gold? Who's gonna and it doesn't get delivered? What happens then? Or
There's insurance.
there's insurance on that as well.
Oh yeah, absolutely. Yeah.
All right. So can you also explain loss of contract? What does that mean?
That's something the lawyer threw in there. I'd have to get my lawyer to tell you that.
All right. And I'm assuming also for loss of use. I mean, these are just very vague terms.
Yeah.
Like I have no clue what they mean,
So-
and they're in your terms and conditions.
So the loss,
and I normally don't look at terms and conditions, but when my Bitcoin or my gold is at stake, I'm gonna take a look.
no, and Tone, I think it's really, really important that you do this, and I wish more people would do it. I really do, and this is again why I actually travel around talking about transparency in exchanges, and I hope that users start demanding more transparency and stuff that the service that you're bringing to the whole community is really important. Things like this is great. Loss of use is basically if the Vaultoro is down for half an hour or whatever. We've had 99.99% uptime, by the way, over the last 2.5 years. But if there it is down, then we can't be responsible for someone's loss if it's down for a half an hour.
Yeah, I think Bitfinex kind of ran into that problem. We're still running into that problem because of their hack. And so what they did was Bitfinex just paid everybody back, but they paid them back the USD equivalent of the Bitcoin at the time of the theft. Bitcoin is now like at least triple the value, I believe, from that day, double or triple the value. People were not compensated for that. They just got the US dollar equivalent. Not to mention those people did not have access to most of that money out the year that they were paying it back as well, right? Though when some people complain they should be compensated for not having their money with some kind of interest, it's debatable how profitable their trading would have been. But yeah, but
I think not only that, it was a true bail-in. People that didn't even have Bitcoin or whatever token got stolen. I think it was Bitcoin, right?
Yeah.
Also got ducted and given.
It was a weird.
Given a haircut,
it was a weird situation. The losses were completely socialized. It didn't matter if your funds were being held in dollars or Bitcoin, or if you were short Bitcoin or long Bitcoin, right? Because if I was lending out my Bitcoin at the time, I probably would have been even more upset. I'm like, well, wait a minute. I didn't believe in Bitcoin. Like, I wanted Bitcoin to go down. I wanted Bitcoin to crash. That's why I was lending it out. If it's stolen from the guy I lent to, he's on the hook for that to me.
Yeah.
So that was a weird situation.
I'm actually super surprised at how little legal push they got. I mean, maybe we're not seeing the whole picture. Maybe there is a lot more, but
yeah. But you know what? People should be happy because otherwise, like we said earlier in this discussion, like the lawyers would have got it all.
No, totally. And I'm actually really, really quite surprised that they've managed to pay off everyone so quickly. I'm not sure what moves they pulled, what sort of investment they got, because it's quite a lot of cash. So I think it's like 140 million. No, what was it? I'm not sure the exact details, but it goes to show as well. It's quite an interesting experiment in understanding how to pay back losses on their side. I thought it was quite an interesting move. I was very skeptical when they first did it. I didn't like it one little bit, but they managed to pay them back. Even if it was at that price, it's more than what I've gotten back for Gox.
So what is your plan in, God forbid, the Bitcoin gets hacked from Vaultoro, or I don't know, who knows? I mean, everyone says that their gold is secure, and unless the gold is in my safe in my house, it's never really secure. Or at least I don't know how secure it is. So what is your plan if the Bitfinex hack happens in your system?
I mean, so first of all, the insurance it costs to secure gold at home is way, way, way more than it is to secure gold in a top tier vaulting facility. And insurance companies know the risks. I mean, that's what they do all day long. They understand risk and they price it. And so if you secure gold at home, it will probably get stolen. But
I agree with you, but at least it's my own responsibility. But more on the Bitcoin side.
Okay.
Right? Like how would you have handled the Bitfinex situation if it happened to you?
So I think the token side, the tokenization side is really good. But we go to all lengths to basically have as little in hot wallets as possible. To put as much in cold wallets, which are unhackable, but unless you are
those cold wallets. Are they individual based, or is it like a few cold? Like, is it commingled funds, or each person has their own cold wallet?
No, so there's 3 cold wallet addresses or 4, and we split them into those 4. They're multi-sig cold wallets. And that's basically it. And when trading starts picking up, our bot might stop trading unless the cold wallet heats up the warm wallet, charges up the warm wallet again. Okay, so there is some inefficiencies there, and that's why I'm pushing so hard for Lightning Network, is because Lightning Network would enable us not to even bother having hot wallets. It would mean we could allow our clients to send us funds at the instant a trade is inserted into the order book. The funds would be sent to the order book, and so holding a Lightning Network would take away the need for exchanges to have hot wallets, which are hackable. But we're also working. I'm working on a framework to enable unhackable warm wallets, which I don't want to talk too much about now, but in terms of unhackable, I mean the unsweepable. So people would have to hack individual accounts. They couldn't go in and sweep an entire wallet. I won't go too much on about it now, but it's something we're developing in-house, and we'll open source it.
Yeah, no, it sounds interesting. I'd like to talk about more in the future on that. But you are saying that on your back end, it's not segregated accounts and cold storage, which I know would be difficult actually. So it is a general. It is a general cold storage, but then the hot wallets are segregated for people.
That's right. Yep. It's it's always the balance between security and efficiency, and we've gone more on the security side than the efficiency side. If we'd rather have more funds in the cold wallet than in the hot. But even saying that, like if I look at the extent at our hot wallet security, it's insane. So I go back to what I was saying before. I think most hacks are internal, because really it's I never say impossible, but it's very close for some outsider to be able to, if done properly, to hack into a hot wallet. Whereas internally, it's a lot easier.
Gotcha. And I was going to say something. Oh man, I had a train of thought, already lost it. That's okay. All right, I think we're pretty much done, unless there's anything else you want to say. Oh, and you're pro SegWit, of course, right?
Oh yeah, absolutely. Yeah, but oh man, just bring on the SegWit. I'm just so over the debate, man. My popcorn machine is broken. Like, I've gone through 5 popcorn machines because there's just so much drama. And people, just stop it. Just signal SegWit already. Get on with it. Let's move forward. Block sizes might need to be lifted for sure later down the track. Let's just get SegWit in place and have the Lightning Network. It'll solve things that are really, really important to solve right now. And by the way, for all the miners out there, we are doing a hell of a lot of off-chain transactions right now. We do a lot of off-chain transactions, and you are not getting a cut of that right now. If we have Lightning Network and we don't need a hot wallet, it means you will get a cut of our off-chain transactions. That means you are more profitable. Activate SegWit. Do it now.
All right, I guess that's a great way to end the interview here. Why don't you give our followers and our listeners a plug where people can find you, anything else they want to know, and then we'll end it there.
Cool. Yeah. You can find me on Twitter. I'm at Vaultoro. That's Vault as in a vault, a bank vault, and Oro as in Spanish for gold. ORO. Vaultoro. That's the Twitter, and Vaultoro.com to do your trading between Bitcoin and allocated gold.
Oh, I just remembered that question. It's a very short yes or no question. Do you offer leverage when people are trading on your platform?
No, not yet, but it is something we're looking on later down the road to enable savers to lend their gold to traders to earn interest on gold, which is not been something that's available at all. This is a major...
That's a little different than leverage. That is more lending, because regulation is very different when it comes to borrowing someone else's money, or like you providing the leverage, as in like what Bitfinex is doing through, like, I guess, rehypothecation or whatever, because CFTC only really in the US only regulates leverage. They don't really, I don't think they fall into that zone. So I think there is a difference there, but that's good to know. Oh, did I lose Josh? Oh, all right. Well, it's good that I got that question in, even though we didn't really get a chance to discuss it. It's also great that he was able to, officially sign off. So my closing thoughts are, I've met Josh once before for like 10 minutes at an event. I was leaving, he was coming in, or the other way around. So I didn't really get a chance to talk to him. The business model is pretty straightforward. People can make their own decisions. So I can't really recommend one way or the other. But if you are someone that is interested in having a quick ability to convert Bitcoin to gold and gold to Bitcoin, Vaultoro is something for you to investigate. I will follow up with Josh on getting those terms and conditions, a little less vague and more specific, which I believe is important for, user protection and stuff like that. But yeah, so please do your own due diligence. This is just me wanting to talk to someone, get an idea of the business. And hopefully you guys enjoyed it, and more episodes to come. Once again, this is Tone Vays, your host of the On the Record podcast here on the World Crypto Network. Please donate, please support, please share, and hopefully we will have more content similar to this for your enjoyment. All right, bye-bye, everyone.